What if the best way to build wealth was a simple 5-minute investment habit that most of the financial advisors would never tell you about? A strategy that I've personally used for more than a decade, and I'm here to tell you it just works. S&P 500 auto investment strategy that Warren Buffett himself recommends for everyday people. Let's find out. See, the world of investing seems incredibly complex, right? So many terms, so many things we need to research, and that's why they have the experts to pick the actively managed funds. What happens there? They just don't work. You know why? You always have a gold standard to compare the performance, and the gold standard is S&P 500. When you say a fund has done good or bad, it is always in terms of the market. The market itself is represented by the S&P 500. So what happens here is in 2-3 years, some or the other, they beat the S&P 500. And then they're like, oh, I beat the S&P 500. Oh, I beat the S&P 500. They market it like crazy. But when you go from that 2-year period to 15-year period, more than 97% of the 2,000 plus funds out there, they lose. There are maybe less than 3% chances of you putting the money in a fund that actually beats the S&P 500. And what happens is these funds, the reason they get beaten by the S&P is because of their high fees. Because of these kind of fees, most of these people, they lose against the S&P 500. This is not something like a subjective thing. It's been proven by Jack Bogle, the father of index investing, then founder of Vanguard. It's not prudent to go for the actively managed funds for obvious reasons of commissions and the fees that they gets marketed the most, while the S&P 500 gets quietly pushed into the corner. So what is this S&P 500? Well, S&P 500 is a group of 500 companies that are selected based on a very strict criteria on automation. It also makes sure the bad companies are pulled away from it and good companies are brought into it. And it has been going on for more than almost 100 years now. But you can do your own research. It's up to you. The important thing is to get started with the S&P 500, and I recommend automating it with the ETF. For Vanguard, it is VOO. I will also put a sheet in the description below which lists the ETF which represents the S&P 500. You can try to pick whatever works for you. The one thing you have to make sure is, though, it's very important to automate this. You don't need to time the market. You just be consistent. This is one thing that Warren Buffett also recommends: consistently investing small sums of money in the S&P 500. Most people, the best move is just to own the S&P 500 index fund. He even put his money where his mouth is, making a famous $1 million bet in 2008. He wagered that a simple, low-cost S&P 500 index fund would crush a hand-picked portfolio of sophisticated hedge funds over 10 years. The result? It was a total knockout. Buffett's S&P 500 index fund delivered an average annual return of 7.1%, while the expert-picked hedge funds, bogged down by high fees, managed a measly 2.2%. Over a long term, that is a very big deal, a very big difference. So take your time, do your research, but get started. That's the most important thing over here. And that's why I lead you to the next part, is how to set it up. First, a lot of times we go into this analysis paralysis. You'll see a bunch of videos out there, a bunch of different things. There is Fidelity, Charles Schwab, BlackRock. There are so many things out there. Don't focus on which fund house too much, but you focus on the vehicle, which is the S&P 500. And the second part is the type, whether you do index or the ETF. And I would recommend the ETF because the fees are the lowest. But the most important criteria is you need to automate it. I will always talk about Vanguard because I have a 20 years experience in investing, and I have found Vanguard to be clean, simple, and even though it might have a little bit of a learning curve, with time it has gotten better. You can always call the customer support and they will guide you through it. So you go to a fund house, you open an account, and you set up an automatic transfer from your checking into the ETF, which is the S&P 500, and you can decide whether you want to do it daily, you can do it weekly, monthly. It's your call. I recommend starting at least with $5 a day, which is $150 a month. Nowadays, a coffee costs $7. So you can definitely do that for your retirement and for your kids, college 529 as well. You can see my video which has in detailed steps how to go about selecting the fund and how to set up the automatic transfer. And that's it. You set it up, get started. With this 5 minutes, it's gonna change your passive investment, and over time, the amount of money that you get goes from $200,000 to $1 million and beyond. Look, the finance industry often feel like it is designed like a casino, built to confuse you so the house can skim fees from your pockets. But building real wealth doesn't have to be complicated. The 5-minute S&P 500 auto invest habit is powerful, proven, and cheap. It's the method backed by decades of data and championed by one of the greatest investors of all time. By ignoring the noise from Wall Street and focusing on this philosophy of automated S&P 500 investing, you're not being lazy. You're actually being smart. By following this path, you're actually making your money make the hardest for you. And that's it. Be patient, keep at it, and I'll see you on the other side.